Hey guys, Mike here. So today we're going to talk about Palantir and SOFI stock news and what happens when stocks sell off. All of a sudden they start getting buy ratings. Why? Because their valuations have come in line to what those analysts think. And so we're going to go over new price targets. We're going to go over the news coming out for both companies, hit the charts, and more importantly, what I'm going to show you right off the bat, if you're sitting there thinking, Jesus, these stocks are never going to stop selling off, and why they keep selling off, right? Then I'm going to show you an interview done with a gentleman who puts it in a way I've never heard it told, and also the people he's talking to who are on the panel who do this for a living for years. Once he said, could you repeat what you just said? And the reason why is because how often do we, raise interest rates in this company over the last, or country over the last 15 years, right? From 08 to 2015, we were pretty much zero. Then we tried to raise in 2015 and 2018. That ended up being pretty bad in 2018. And they realized we can't really go above 2% or it's going to be a train wreck for the economy. Then we pretty much went down to zero again. And so that's why when he said what he said, and I'm going to show it to you, people were really surprised, but it really puts it in a context where you can understand what's happening and what's most likely going to happen to these kind of stocks, okay? And so if you're getting out of it, hit the like and subscribe button for me, guys. I really appreciate it. And let's go ahead and get into that first, and then we'll go into Palantir and SOFI, okay? And so first and foremost, when the S&P has a huge year, when it's up 25% or more, which was 2021, you will have an ensuing sell-off at the beginning of the year, 5.2%. Usually the average that happens. It could be higher and lower, obviously, which means the NASDAQ will sell off even more, of course, because it has a lot more high growth stocks in it. And so here's the gentleman I'm talking about. He is a managing partner at a big investment company and named Gene Munster. So take a look and see what you think here.
So every 1% change in the Fed fund rates typically impacts the valuation by 10 to 20% for these companies. And so, there's a projected 1.5%, 2% move. It is a measurable impact. And so that is part of the reason why I said we're not through this, is we still need to digest those changes. If we can get clarity about where the rates are going, then the market can identify that and can move on. We've seen some of this. NASDAQ's 6% off, but if you assume we go to a 1.5% Fed funds rate, that would assume there's another 5 to 10% downside to the NASDAQ.
And so hopefully that makes sense, guys, because remember, the analysts, the investment companies are still trying to figure this out because we hadn't raised rates in a while here. And so they're trying to figure out what the correct evaluations are, not just for high growth stocks, I'm talking about for FANG stocks, which have carried both markets, okay? And so that's what we're going through. Again, we hadn't even started raising rates yet, right? And so, it's going to be an interesting year, okay? But that's what's happening. So you're wondering, what in the world is going on? And, as you can see, we'll start off deep red, in green, start off green, in deep red. I mean, it's so volatile right now, what's going on. And this is where Kathy Will was talking about, if you watch my other video about the algorithms, which of course run the stock market now, have us all over the place. And so, we'll see what happens, but that's affecting these two stocks we're about to talk about, okay? So that's what's going on. It's not that the companies, all of a sudden took a dump. So, oh my God, there's all this bad news coming out about them. Nope, not at all. Hardly any of those companies. And so, that's what's happening, just kind of put it in perspective. So let's go ahead and get into Palantir first and get into the stock chart to start off with. And so, of course, Palantir has been in this major sell-off of 44% over the last 67 days. It's like it never wants to stop. And I actually had to go and draw a new support line as it finally broke the other support line right around $18 that had really respected for a long time there. And go back to November, almost when they first came back on the market, which was like October, excuse me. And so, that's where it possibly could drop to. But when this happens, all of a sudden the valuations start coming down. And of course, what happens, Jefferies, finally, it's been a long time since I've been on TipRanks for Palantir and seen this, but they give them a price target, 24 bucks, buy rating, 51% upside, and that happened about 9 days ago. And you can see before that it was hold, sell, hold, and this was a couple months ago. And so they never get any level on TipRanks or from analysts. So you can tell the price is dropping. And of course, Aunt Kathy over at Ark, she started loading up. She started the year with around 22.5 million shares in ARK, built it up to 24 million, and sold off some the other day. And, if we scroll down, you'll see she's done the same thing in RQ, started buying some there as well. So she's, loaded up at these prices to bring her average down, of course. And so going to some of the news that came out of Palantir recently, I've been waiting for this one out here to happen because I thought they'd be really good at it. But Foundry is going to build an operating system for the construction industry supply chain to obviously make them more productive and stuff. There's about a 5-minute video you can watch on YouTube on this exact thing, which they do a great detail and explaining it, the company that is they're actually going to be working with. And so I expect this to actually spread to other companies because I'm expecting Palantir to be one of the main companies people go to for supply chain logistics after this disaster we've run into with supply chains. And it also came out the other day, they're going to come up with a certification program so their customers can actually get more out of Foundry and actually understand it more. I think they're kind of seeing, I mean, this is a complicated system they run. And so this is just something to kind of empower their customers or maybe even future customers to get more out of it. And one good thing about a stock selling off, guys, is the valuations come down. You know, you always heard about their price sales ratio being too high, up there above 30, between 30 and 40, and now it's at 21. And so with this sell off, and that's why you see analysts come in all of a sudden, you know, and they got earnings coming up. Well, let's not forget in Q3, they increased their billings by 56% year over year to 347 million. They ended up having their remaining performance obligations grow by 172% year over year to 874 million. And then their adjusted gross margin improved to 82%. And, you know, looking at the year going through the first 3 quarters, you're looking at revenue growth of 44%, adjusted free cash flow, which is the big one, 320 million. That's a 29% margin. And then adjusting operating income to 349 million. That's a 32% margin. And so Q4 obviously is going to be important. I have no doubt. I mean, I'll be shocked if they don't hit the numbers, but it's not about the numbers so much as it is about the forecast, right? And so that's what we're going to see in this 2022 year. You know, what they're going to be forecasting. Are they going to guide down, up, or just kind of keep it the same? And the good thing is it's sold off so much at this point in time. Usually they end up popping on earnings, and so we'll see if that happens this time. Again, we're in a different environment right now because we still don't have the first rate hike. There's still a lot of uncertainty in the market, which is also one of the things that gentleman said, that if the Fed can just literally just lay it out and say, here's the dates we're going to be doing these rate hikes, here's exactly how many we plan on doing, that kind of stuff, everything's going to be good. If they come out and just keep playing this nonchalant, like, well, we may do this, we may do that, the market's going to stay uncertain because it doesn't like that, okay? And so, you know, now going into SOFI, we're going to start off with the chart. As usual, go ahead and hit me up in the comments what your thoughts are on Palantir as well. And so now let's hit SOFI. And so looking at SOFI's chart, obviously it's not as bad as Palantir, but, you know, obviously nice sell-off. And I had to go back on this one too and create a new support line that finally broke. The support line's always followed. Had to go back to December of last year, around $12, which is where, you know, it can head to. There's really no support from that like $13.50 to $14 range up there that's fell under to keep coming down. Now, obviously, like I said, when the price sells off, what happens? You're going to get analyst upgrade. So Morgan Stanley puts a $20 price target, a buy rating as a 54% upside from what their price target is. And this was 2 days ago. And then 6 days ago, when you're actually watching this, you had KBW. They actually did a hold $18 price target. And then, of course, you see the old ones right there from Citigroup and Jefferies. And then, you know, just looking at what we got going on here, because, again, they'll be doing earnings at some point in time, too, coming up. And this is the projections people are looking at. This is what analysts are looking at, right? And so this is what's important. This doesn't take into consideration any bank charter, okay? And so you can see 2020, the lending made up 83%. You look to the right, projected 2025, lending only makes up 43%. And why is that? Well, because the tech platform is projected to grow from 17% to 25% of revenue. And then more importantly, the financial services are projected to grow from what they project 2% in 2020 to a projection of 32% or $1.2 billion in 2025. And so that's going to be the big one. And, you know, of course, the uncertainty around SOFI, of course, is profit margins is what got people really worried here. But, I mean, to me, and again, this don't include the bank charter, but I think if the bank charter gets even better, their margins will improve greatly. But you see 2021, 3%, 2022, looking at a bump of 17%. And so hopefully they can keep improving their margins. And, you know, speaking of the bank charter, you know, it's always hard to find information on this because they're very secretive, but they did put out a reply to somebody on their Twitter account. Again, Twitter is not the best place to go, but it's where they communicated this at. And it was saying that they cannot provide an update on the bank charter application because there is no change in status. The process has been completed satisfactorily, and we are waiting for a response. We have no control over the timing. That is entirely at Washington's discretion. I can assure you that we have followed all rules and regulations related to this application, are in good standing with the OCC and Fed. We are anxious to hear back from them as our investors are. And one good thing that did come out that can't hurt them, but I don't really think this was targeting them per se, was on the 13th, which was a couple days ago, the U.S. state banking regulators dropped their lawsuit over fintech charters. Now, when I read this article and looked into the lawsuit, they had named another company, not SOFI, and obviously other fintech companies have gotten these charters. And so, I think they finally just gave up and dropped it. But hey, can't be bad news for SOFI, that's for sure. And if for whatever reason, if the government was planning on trying to hold up the charter until they saw what happened with this lawsuit, which I don't think they were, we don't have to worry about that anymore. Now, I did find this video, describing what it's going to be like to own SOFI stock this year. And maybe even next year for that matter, or if you plan on getting into it. And I think it just this little blurb summarizes it just right.
It's a long-tailed play. It's going to be a little bit of a roller coaster ride.
Yeah.
It's already, pretty much break even profit-wise. So it's not a money loser. They have plenty of money in the bank. Like I said, they're acquiring a bank and capitalizing it really well. This is not a company that's going to need to raise capital over and over and over again.
And so I think that was a good summarization of what it is if you're holding the stock, what to expect. I know it keeps going down. But I understand it's all about that bank charter, right? The CEO called it a game changer. I call it a game changer. Look at what it's done for other fintech companies that have gotten it. It's done wonders for their financials and their company. And so that's just kind of the way to look at this. And so, and it should pop for sure off that bank charter news if they get it, because these rocket companies, space companies can pop so much off of one rocket launch or something. A bank charter is a heck of a lot more important and for the long term than one rocket launch. And so you should definitely see that no matter what's going on. I know both keep selling off, and I found this other thing on Twitter, which made me laugh. And in these kind of times, you just gotta find times to laugh, right? And I said, so if anybody had a bad year, it had to be this guy. So when you think you got a bad year going on, check this guy out right here. And it says, hard to think there's anyone that had a worse year in 2021 than Bill Wang. And so he was the one that owned, Viacom, CBS, Discovery, and all those. And he was forced to liquidate more than $20 billion due to a margin call. And you can see the chart over to the right there. And then in the bottom, there's this guy hiding behind a tree, rubbing his hands, and it's like, Bill Wong getting ready to harvest his tax write-off. And so hopefully you hadn't been getting margin called with either one of these stocks. But, if you're a long-term investor in either one, will we ever get a buying opportunity this good? I'm not really sure. Can they go lower? Absolutely. I'll show you the support levels. The way the market is right now, just as other people that own other stocks. Okay, when you got FANG stocks falling, you can guarantee the high growth stocks are going to fall even more. And so we'll see. We just got to weather the storm and stuff. And if, like I said, you're a long-term investor and you dollar cost average into these things, you should be bringing your costs down right now. And so just holding for the long term. But anyway, let me know what you think in the comments. Hit the like, subscribe button if you got anything out of this. I really appreciate it. And I'll see you guys later.